This is Jeffrey Friedland. Welcome to Business Connect Insider. I'm delighted to be here today with attorney and certified public accountant Sean King, the founding principal of CIC Services, and Randy Sadler, who was also a principal of the firm. Both Sean and Randy are joining us from Knoxville, Tennessee. CIC Services is a captive insurance company, manager, and strategic risk management partner to middle market companies. Since 2005, CIC Services has been helping small and mid-sized businesses and business owners turning their risk into a profit center by essentially owning their own insurance company. We're here today to discuss captive insurance, what it is, and whether your company would benefit from owning its own insurance company. Sean and Randy are here today to get the word out about the advantages of captive insurance and the services that CIC Services provides. If after watching this short video, you find captive insurance intriguing, have any questions whatsoever, or want to have a call, Sean and Randy are delighted to speak with you. Welcome, Sean. Welcome, Randy.
I'm glad to be here, Jeff.
Thank you, Jeffrey.
Thank you.
Sean, let's get into it and start with you. What is captive insurance?
Great question. A captive insurance company really is just a closely held insurance company that's formed primarily to insure the risks of one or more related businesses. When I say related, it could be a parent to the captive insurance company. It could be one or more brother, sister organizations to the captive insurance company. There are other types of captives, association captives and the like, where there isn't necessarily common ownership. But when folks talk about captive insurance companies, they're normally talking about that structure where a business goes out, forms its own insurance company for the primary purpose of insuring risks related to that business. Now, captives will often also insure unrelated risks of unrelated third parties, but the primary insured is normally the related business, and hence that's why we often use the word captive, because the insurance company is somewhat captive to the primary insured.
Okay.
Yeah, you know what? The word captive sometimes has some unusual connotations, so I like to call it tethered. So it's tethered to the main business, but yeah.
Okay. I mean, let me ask a follow-up question to that, Sean. There's all kinds of risks out there when you have a business, from product liability to property risk, et cetera. What is the main driver that would get somebody wanting to essentially own their own insurance company?
Well, there are multiple drivers. In some instances, it's a desire to insure risks that can't be cost effectively insured on the third party commercial market. If you have risks embedded in your business and it's going to take you, 5-10% of your gross revenue to insure that risk through some unrelated commercial insurer, most businesses just can't afford that type of hit. That sunk cost of insurance. But if they own their own insurance company and they know that if they do an effective job of claims management and the like, that they're going to get to retain some of that money inside the captive insurance company, that can often allow them to insure risks that they otherwise would not. Another reason is to potentially gain access to the reinsurance markets. When you're buying insurance from a commercial carrier, you're buying retail. Insurance companies can buy insurance from other insurance companies wholesale through the reinsurance market. And so oftentimes captives are formed in order to gain access to the reinsurance market. And there are a number of other really good reasons, oftentimes replacing insurance that you've been buying from an unrelated third party. Let's say you have a very favorable claims history. You've done an excellent job of claims management. You've been paying premiums to this unrelated commercial carrier now for for years, that's a sunk cost. Well, if you continue to do good job with claims management, you can pull that premium back. You can insure that same risk through your captive and potentially retain some of those profits if you continue to get lucky. So there's a wide variety of reasons.
Great.
Yeah.
For that.
Jeffrey, it's funny, but I just got off of a call this morning with a snow removal business up in the Midwest who has spent close to $1.4 million over the last 5 years on insurance coverages, and they've only had about $200,000 of losses in that time. So, that's about $1.2 million is gone away to the carriers in profit, right? So this business owner is interested in keeping some of that profit for themselves, and so they're very interested in the captive. The other complaint that they had, and this is something that we commonly run into, is that the carrier always wants to settle rather than fight claims, even when they're totally illegitimate, right? So this business owner was complaining to me that, I've got cameras on the trucks that show what happened, and the carrier still settles and pays the claim and then raises my rates. So the frustration over no control of claims is a big deal.
Okay, look, thanks for that. That's great. And that's a great example too. And as a follow-up to that, Randy, other than snow removal businesses, what type and size of company do you find is most appropriate for captive insurance?
Yeah, that's a great question. And what we typically find is that the businesses that typically have gross revenue 3 million or more may very well be a candidate. And that seems like a very broad group, 3 million or more, but that's typically a large enough business to have enough things going operationally and enough risks to the business that a captive might be justified. And when you think risk, think broadly. Think not only, let's call it core risk, which is insurance that you're required to buy, whether it's because the state makes you pay for auto insurance, or a contract makes you buy a certain liability policy, or a bank makes you buy a property coverage because they have the mortgage, right? Those are maybe core risks. But then there's operational risks inside the business owner's control, and then strategic risks, existential outside threats that could upend the business. And so if you really think broadly, the sky's almost the limit. So common businesses that we insure or have seen captives for in the last few years, construction's a huge one. Any kind of distribution company, manufacturing, warehousing, wholesalers, any kind of business that has a supply chain that they're heavily relying on. We also see captives quite a bit in the medical space with dental practices, physician practices. But even, surprisingly, we often run into captives in areas we hadn't even thought of before because they have really big risks. Where we've seen a lot of growth in the last year has been with technology companies because it's extremely hard to protect their intellectual property, and cyber is a gigantic risk that commercial policies rarely really address completely. And so tech has been huge for us in the last few years as well.
Okay, that's great. That gives us some real examples. Sean, we've covered this to some extent, but why should one of our viewers consider captive insurance? What's the biggest drivers there?
I think it kind of comes back to sort of the motto of our company, which is turning risk into wealth, into profits. Risk properly managed can be a profit center. That's what the insurance business is.
Yeah,
is
right.
Risks hopefully properly managed. And it's not impossible. In fact, through captive insurance companies, it's very achievable for small and mid-market businesses to set up a formal risk management program and to insure wealth through their captive, or insure risk through their captive insurance company. And by doing so, potentially save large amounts in commercial premiums. Sometimes, depending on the circumstances, there may also be significant tax benefits to setting up a captive insurance company. Kind of like when when you save for retirement through a 401k, you get certain tax benefits that you don't get if you just bury money in the backyard. It's the same with captives. If you formally insure risk through a real legitimate insurance company, you can potentially gain some pretty significant income tax benefits that you don't get if you're just informally reserving money or paying claims out of your pocket as they occur. So there's both very practical advantages and potentially, for some businesses at least, some significant tax advantages also.
Great, thanks for that. Randy, I think this is really important, but your CIC Services team provides turnkey captive management. Because I'm sure many of our viewers are saying, I don't know how to run an insurance company.
Right, yeah.
And you coordinate all the services the client needs for a successful and profitable captive. Can you expand on this a little bit for us?
Sure, yeah, I'd be glad to, Jeffrey. So, one of the things that I'm often asked, so what do you do as a captive manager? And one of the best analogies I can come up with would be, imagine if you wanted to build an apartment building and lease it. So we would be the general contractor and the property manager all at the same time. So we'll build your apartment building for you, and then we'll turn around and we'll market it, fill it with tenants, pay for the grass to be cut, pay for it to be painted and repaired, collect the rent, pay for the plumber to come out when the toilets back up, and then pass all the profits on to you as the owner. So what we do is work with businesses and business owners and help them own their own insurance company. So we lead or guide the formation of the insurance company and then the ongoing operations. And in the process of forming an insurance company, we're going to do several things. One, we're going to do a thorough risk assessment with the business owner and the business and put together a full report on all the risks that they face. We normally use an independent third party to do that so that we have really an arm's length nature to the transaction. And then we're going to recommend a captive attorney that's going to work for the business owner and the business and also work for the insurance company and not for us. Again, keeping that arm's length nature of the transaction so that we have someone acting in the best interest of the insurance company and not simply in our best interest as a captive manager. Then we coordinate actuaries who price the insurance policies that have been identified in the risk assessment. Those risks have also been underwritten by an underwriter who takes those risks, translates them into insurance policies and assigns appropriate limits. All these things are very important. And so we coordinate all that on behalf of the client and the soon-to-be captive insurance company. And then once that's all done, we put together what's called a feasibility study working with the actuaries and the captive attorney. And then we take that to get an insurance license. So the great news is our clients don't have to get an insurance license, but the company that they will own will get a license to write insurance. Well, who's it going to get that from? Insurance is regulated by the states, not the federal government. So typically a state like Tennessee, North Carolina, Delaware, Connecticut will issue an insurance license to that insurance company. And so we apply for that license on their behalf, and they now own a licensed insurance company. We also oversee premiums being paid to the insurance company by them. So they're writing a check from their business to their insurance company. And then we make sure that the policies are actually issued out. And then in future years, we also oversee the CPAs that are going to do tax and audit work for the insurance company. So we coordinate all that on behalf of the client and make sure that the insurance company is in fact protecting their business and giving them the peace of mind they deserve. So anytime you're running an insurance business, you're going to have losses, and it's important that those losses be administered properly. So we have a third-party claims administrator that we coordinate with that comes in, verifies that the loss actually did occur, that it's actually covered on their insurance policy. Provided all those things are true, the claims administrator approves the claim, and then the captive is able to pay the claim to the business. Yeah.
So any business that meets the criteria that you mentioned earlier can really look at, they're saying, look, we're busy running our business. We don't have time to run an insurance company. But if they're interested in saving money, which is obviously key, basically everything having to do with the administration, CIC Services will provide. Is that fair? That they don't get burdened with having to operate this insurance company that you're going to.
Yeah, CIC Services either provides it or coordinates it. Either way, we make it effectively a turnkey experience from the client's perspective.
And
I will say that some clients are intimidated by the idea of operating their own insurance company, and they're right, I think, to to give that due consideration. But really, operating your own captive is in most cases less work than operating a 401k plan. So if your business has a 401k plan and you're accustomed to having a TPA who's doing the compliance work and all of that sort of stuff, as a business owner, that takes a few hours of your time a year, and it may take even a little bit more of that for some of your staff. But really, operating a captive is generally no more challenging for a business than operating a 401k plan is when they partner with the right people.
Mm-hmm.
Okay, Sean, I was very impressed and surprised to see a recent U.S. Supreme Court case that really impacts CIC Services, your clients, and captive insurance. Can you give us a quick summary and overview of that?
I'll be glad to. It's actually bigger than just CIC Services and captive insurance. The IRS makes a habit of imposing substantive obligations on taxpayers quite frequently through just issuing notices. In the captive insurance industry, one of those notices was Notice 2016-66. And under the law, the IRS is supposed to, and any federal administrative agency is supposed to, follow due process before they issue regulations that impose substantive obligations on the public. The IRS, pretty much alone among federal agencies, has long disregarded that obligation. They just issue new notices that impose these obligations, sometimes potentially massive obligations with massive penalties for those who fail to comply, and they don't follow due process. They don't follow notice and comment rulemaking. In any other context, taxpayers or the public would sue, and federal courts would step in and intervene. They would declare that promulgation to be illegal, and they would say that the agency is not permitted to enforce that rule because it was not passed in the proper manner. The IRS, however, has long contended essentially that it's exempt from that requirement, that because of an old Civil War law called the Anti-Injunction Act, that federal courts are not allowed to intervene to declare certain rules that the IRS promulgates to be illegal and unenforceable, and that taxpayers' only recourse is ultimately to potentially pay whatever tax or fine or penalty may result, and then sue for a refund. Well, we thought that was wrong, so we ended up suing the IRS. I'll spare you the whole procedural history, but several weeks ago now, the Supreme Court ruled 9-0 in our favor, saying that federal courts are in fact empowered to intervene, at least in some circumstances, to declare certain types of rules illegal and unenforceable. So our case has now been remanded or sent back to the lower court, the federal district court, for a adjudication on whether or not the rule is in fact illegal and whether or not we are in fact entitled to an injunction. We think we are, and we're fairly confident in the outcome, but time will tell. In any event, it was a big win. And it has significance well beyond just our industry, because it really gives taxpayers a new weapon to challenge IRS overreach and IRS, frankly, abuse from time to time.
Okay, thanks for that. Sean, one last question for you. Your approach, CIC Services approach to captive insurance, optimizes both the liability and asset sides of the balance sheet. What is this? You're an accountant. My background's accounting. What exactly does that mean for our viewers who may be considering captive insurance?
Great question. So many in the captive insurance business, when they say they're a captive manager, they're really not. They're really just looking at the right-hand side of the captive's balance sheet, which is the liabilities of the captive, the reserves of the captive, the retained earnings, the policies that the captive issues that ultimately result in those liabilities. But they really, in general, give no attention to the asset side of the balance sheet, which is really important. If you're a commercial insurance carrier, you have people who are, full-time jobs are managing that left side of the balance sheet, because the whole goal is to get those premium dollars in, get them invested, earning a return, and hopefully earning returns that help offset any losses that the captive might incur over time, or result and generate additional profits. So far too many of the people, in our view, in our industry, give not too much attention to the right side of the balance sheet, but they give too little attention to the left side. And one of our goals coming into this industry many years ago now was to remedy that. It was really to help clients do proper asset liability matching. It was to help them focus on the assets of the captive as much as they do the liabilities. It's for us to help partner with the right external firms and resources who understand captives, who understand the unique challenges that captives have in deploying their assets effectively, and just making sure that we really are captive managers, managing both sides of the captive's balance sheet rather than just one.
Okay, I think that's key. Look, Sean, Randy, thank you very much for spending a few minutes with us here today. I'm sure that many of our viewers are going to want to reach out to you, because this is obviously a little bit complex, but at the end of the day, it's all about money. And so I would encourage our viewers who want to have a short chat with you to pick up the phone, understand the program better, understand how it could be applicable to their own situation. We're obviously providing contact information. And again, thank you, Randy. Thank you, Sean, for spending some time with us. And to you, our viewers, thanks for joining us at Business Connect Insider. Until next time, this is Jeffrey Friedland. Goodbye.